Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders, so essentially the non-commercials. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is currently still in the rejection phase away from a quite strong historical structure level for this market. This area, in fact, was already acting as previous resistance starting from here, preceding all these previous rejections to the downside. Then the market broke above the zone with this impulse. At that point, all that previous resistance was turned support here. So after the market successfully broke above the zone, all this previous resistance became support. The market retested the previous resistance turned support, and currently it is still in the phase of rejecting that level to the upside. So we are currently still in the impulse phase following the breakout of this historical structure area. We must also notice, however, that no market can just continue going up in a straight line. Every uptrend is composed by a series of impulses and corrections. So every time you see a massive impulse, any healthy market at some point will need a correction before then new buyers come into the market, which at that point can follow through with the next impulse phase. So in this specific situation, there's a good probability of seeing first a rejection, so a correction essentially, and then the continuation to the upside, essentially for the creation of yet another impulse correction, impulse pattern to the upside, as we had right here, impulse, correction, and impulse pattern to the upside. We must also notice that, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 retracement currently lining up exactly this area, which increases the probabilities of the market to create a correction to this zone before then continuing higher. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, this is where things become quite clear. First of all, we must understand what happened around this area here where we had this cluster of price action. What we can notice is that inside of this zone, the market was clearly stuck in a range. We had the bottom of the range here and the top of the range here. In fact, the top of the range was respected as resistance in multiple occasions, and the bottom of the range at the same time was respected as support in multiple occasions. Then, with this green candle, the market broke above the top of the range, and all this previous resistance after a break to the upside was turned support. And currently, the market is retesting this previous resistance turned support and is currently in the process of rejecting this level to the upside. So the weekly time frame as well seems quite bullish, with the market creating a rejection away after having broken out to the upside from the weekly range that we have just identified. We can also notice that from a pattern standpoint, we just had a clear impulse followed by a correction. The market is currently trying to continue higher. However, it is now exactly at the previous high. So as the market is at the previous high, there is always the probability of seeing the creation essentially of a potential double top at the zone, because the previous high is simply a resistance level that you never know if the market will actually manage to break it to the upside. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, I spoke about gold just a few days ago when the market was around this area, and I explained all the reasons for which I was expecting a correction to this area, and then from here the rejection to the upside. And that is in fact exactly what the market just did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on gold. Now, what we can see here is that in the long run, institutions have increased their net positioning quite a bit. We went from having 199.5k net positions all the way up to 315.3k net positions. And right now, we're starting to see once again a decrease of net positions from 315k down to 278k. Now, this is the first time in quite a long time that we're starting to see once again net positions getting decreased, meaning that institutions are once again expecting gold to be a bit weaker in the short term. We can see in fact how institutions added 591 shorts with the last report and closed 21,000 longs. So they're starting to close longs and open shorts, meaning that that correction that we have identified that the market has the possibility of creating here from a monthly perspective, it definitely also institutions seems to expect such correction, and that is why they're decreasing their net positions essentially. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, in a situation like this, what we have to check is what kind of pattern the market is creating. And if we follow the movement, we can see that we had first a move to the downside, correction, lower low, and now the market is currently creating a higher high. So that essentially would create a daily W formation. Now, I spoke about W formations quite a lot. After the creation of a W formation, in my experience, the market tends to create a rejection to the downside, completing the W formation at the neckline. This is a pattern that the market likes to create over and over again. We can see, for example, one here. So when there is the creation of a W formation, usually afterwards, the market follows with a rejection to the downside. It's not every time, but when there is such pattern, in my experience, there is an increased probability of seeing that potential rejection to the downside. So if the market here will follow through with the creation of this W formation, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market at that point, I wouldn't be surprised to see a potential rejection to the downside, completing this W formation at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.